Welcome back, guys, to another video. We have a lot of really fun Tesla news for this video, especially things revolving around shorts, stocks, and also Tesla apparently wanted to sell its company to Apple in the very beginning at a tenth of a price at $65 billion. Yeah, you heard that right, which we will get into later on in the video. This is honestly pretty crazy. So at this current moment, let's talk about the stock, okay? Tesla stock is doing incredibly well. It's not really too volatile anymore. It's kind of stabilized, especially how it's joining the S&P 500. It's joining the S&P 500 as the top 10 biggest stock. And the good news about joining the S&P 500 is now if I spend $10,000 on the SPY stock, which tracks the S&P 500, it's a great ETF, a basket of stocks, especially if I'm wanting to look for retirement. A lot of people like to just dump their money on this ETF. And guess what? Even if I just don't like Tesla, I'm forced to buy it because Tesla is now part of the S&P 500. A lot of people's portfolios at this current moment have SPY. It's the most popular ETF in the world. It's made by Spider, and Tesla is in it. So if you guys want to have the S&P 500 tracking yourself, since it's a really good investment, you're going to have to own Tesla whether you like it or not. And at this current moment, the short sellers, who are the people that are betting Tesla going down, are admitting defeat after Tesla's first trading days in the S&P 500 index. They're doing really well. So if you guys don't know what short sellers are, essentially they're betting the stock goes down. Short sellers borrow shares from other people that have shares and they sell it right away. When they sell it, they have an obligation to buy it back, but you want to buy it back at a lower price. So let's say I borrow someone's stock, I sell it at around $600. I'm hoping Tesla drops to, let's say, $550. So when I buy back, I make that net difference of $50. That's called short selling, and you lose a lot of money when the share prices go up. And the losses are essentially unlimited because the stock could go as high as you want. Remember all the way back in January of 2020, the share price was super small at like $93. A $93 stock price. This is when the peak of the short selling was happening. So many people was betting that Tesla stock goes down. And guess what? Tesla in January 2020 went from roughly $90 to $630. This is insane. And people lost billions of dollars betting that Tesla goes down, which wasn't really a good choice. Now, Ortex Analytics is showing that short interest, the amount of people betting Tesla going down, is hitting a record low. I think Wall Street and also Main Street are simply throwing in the towel. They have kind of just given up trying to short Tesla because Ortex Analytics has a new research that shows the numbers of people betting that the stock is dropping has fallen. And there's an estimated of roughly $30 billion in losses from the short sellers. That is a lot of money lost. And according to Ortex, bearish bets against Tesla has fallen to 31.4 million in December, which is a lot lower from 93.6 million in January of 2020. So the amount of people calling it quits have dropped by roughly 60 to 70%. And there's good reason why. In the very beginning, everyone just really thought of Tesla as a car manufacturer. And around that time, Tesla really wasn't doing that well, especially with this pandemic coming in. Everyone's like, Tesla would not survive. It's a luxury car manufacturer. They cannot do anything. But guess what? 2020 was Tesla's best year, even when a lot of luxury automakers were struggling during the pandemic. It's kind of weird, isn't it? And also, Tesla is way more than just a car manufacturer. There's still a lot of CEOs, top executives of companies, and also individuals that still think Tesla shouldn't be evaluated this high because they don't sell enough cars. And if you guys watch my videos, you probably have noticed I cover a lot more than just the number of cars they sell. They have really good autopilot system. At this current moment, they do have the full self-driving beta software, which is already released to a few people in the world, but they will be releasing a wider one for the general audience if you have the $10,000 autopilot in your Tesla around January, February of 2021. It's called the wider FSD beta release. And that means pretty much every single Tesla owner will be able to drive hands-free in the middle of cities. No other car company could do this. I don't see Toyota, I don't see Mercedes or BMW doing this. only Tesla. And Tesla is also dominating the battery aspect. They have this battery factory in Nevada, a battery factory in Berlin, and an upcoming nickel factory in Indonesia. They're thinking like 5 to 10 years ahead. At this current moment, even the Ford CEO acknowledges that battery factories are important, but he doesn't really have any plans for one. So guess what? In the next few years, the person that will be dominating virtually all of the battery cells for vehicles will be Tesla, because the third-party companies are way too small to compete against this giant who has $20 billion in cold hard cash. Tesla is also thinking about merging with other companies. We might be thinking that Tesla will be merging with like a last mile logistics electric company, maybe a rival EV, because Tesla's commercialized vehicles include a Tesla Semi, and that's about it. They may be merging with another company so they can start making electric delivery vans, maybe electric small pickup trucks, and maybe even electric buses. So there you go. That's just something for you to think about. Lastly, Elon Musk said that he wanted to sell Tesla to Apple all the way back in 2018 for $65 million, which $65 million is 1/10 of the current market cap. And Elon Musk has also said that Tim Cook, the CEO of Apple, actually refused to meet him. And I'm pretty sure Cook right now is kicking himself because Tesla is now worth almost $1 trillion. It's pretty wild. And I'm really glad that Tesla never sold the company to Apple because it would have never been this big as of today. But at that time, Tesla was just simply plagued with a ton of production issues. They were losing money. They weren't having enough capital. They weren't selling enough cars to make up for it. They were having like the battery branch, the autopilot branch struggling. It was super, super hard. At this current moment, Apple is looking to launch their own electric self-driving vehicle with the next level battery technology. One of the biggest reasons why Apple probably would have not bought in Tesla was it was a failing car manufacturer and they don't really want to take on that debt. At around that time in 2018, it was a time when Tesla was not at its prime. Everyone laughed at Tesla and no one really knew that Tesla was going to be big. No other fund manager was buying Tesla stock except Cathie Wood and ARK Invest. There were rumors back then about how Tesla was going to be sold to some other massive company, and Musk lately has confirmed it that in 2018 he thought about selling it to Apple. But I guess that deal never went through and now Tesla is worth over $500 billion. It's honestly pretty funny in the world of business. Thanks for watching, guys. Comment below. We got a lot more Tesla news coming in, especially with the upcoming gigafactories, the full self-driving beta. There's updates every 5 to 10 days. So we should be seeing some massive improvements in the software. But of course, how do you guys feel about this video? We got a lot more stuff coming in. And we do have 2021 going to be Tesla's biggest year, in my opinion. 2020 was already pretty big with so many major pieces of events coming in. It was a really great year. But let's see 2021.